you think gold could get to or surpass 27,000, and you say, look, this isn't just some forecast. I didn't just make this up, but you could see gold, I'm not saying in this year or next year, but heading towards 27,000. You say, look, this is not just a number you're making up. We all know, anyone who knows you, Jim, knows you take deep dives, you do a ton of research. So I'd love for you to walk us through how you got to this number and in what time frame you think this could happen in.
Right. Well, there's a predicate, so it's a little bit different than a hard and fast prediction. I did. The number was about $27,000. You're right. There's a predicate, which is what happens if investors, savers, markets around the world lose confidence in the U.S. dollar. And by the way, if people lose confidence in the U.S. dollar, don't think for a minute that they're going to run to the euro, the yen, pound sterling, Canadian dollars, or whatever. They're not. All those currencies are part of a global euro dollar, US dollar system. So if you lose confidence in US government securities, for example, the US dollar, you're not going to run to, German bonds or Japanese government bonds. That whole system is going to be severely impaired. In which case, you may have to go back to some kind of gold standard, gold linked, gold backed in some fashion, not because you want to. There's no central bank in the world that wants to go to gold, but they may have to restore confidence. Now, if you do, if you say, okay, we have to get back to some kind of gold system to restore confidence, what would the price of gold have to be to make that system work? Well, we have a lot of historical precedent. There was a real gold standard solid gold standard from 1870 to 1914, modified gold standard from after World War I, say 1919 through World War II, the Bretton Woods Standard from 1944 to 1971. So we do have precedent for this. And in every case, you don't have to have enough gold to back 100% of the money supply. Some of the hard shell gold bugs say you do, but that's not true. Historically, you need between 20 and 40%. So let's just take 40%. Look at the U.S. money supply, and I use M1 because it's broader than Fed-based money. It includes checking accounts. It's kind of like the money from the banks that drives the real economy. So if you take M1 and take 40% of that and say, okay, that's how much gold I need to back it up, and then say, okay, how much gold do I have? The answer is 8,133 tons. That's how much gold the U.S. has. And just do the math. And this is, as I say, this is seventh grade math. You say, what would the price per ounce have to be for 8,000 tons to back up M1? And the answer is $27,000. By the way, I did the same math not that long ago. Well, 7, 8 years ago. And the answer was closer to $15,000. But the reason it's higher, gold is still gold, but the money supply is a lot bigger. So with the same amount of gold and a larger money supply, you need a higher price per ounce to back up the money supply. And by the way, I spoke to Paul Volcker about this, and he agreed. He said he wasn't advocating for a gold standard, but he said if you had to go back to a gold standard, he just threw his hand in the air and said, oh, the price of gold would be unbelievable. And of course, he's right. So that number, if things kind of remain the way they are and confidence in the dollar remains, we can talk about that, by the way, because there are arrows directed right at the heart of confidence in the dollar having to do with Russian assets in the war in Ukraine. But if confidence is maintained, then it's a market factor. Maybe you don't get there. But if you have to go back to a gold standard, yeah, $27,000 would have to be the price in order to avoid massive deflation.
So my question to you is, how likely do you think that scenario would happen, that we would be pushed towards going back towards a gold standard? Highly likely, somewhat likely?
I would say more
Where
likely
would you
all the
put it?
time, more likely all the time because of the stupidity or blindness of the Biden administration officials. And here, let's talk about the effort to steal Russian assets. Now, at the outbreak of
Right.
the Russian special military operation in Ukraine, at the start of that, the U.S. froze the assets of the Central Bank of Russia.
Yes.
Almost unprecedented, not completely, but almost. about $300 billion of U.S. Treasury securities owned by Russia. That they had surpluses, they had dollars, they invested the dollars in U.S. Treasuries. They had about 300 billion. They're all digital book entry. There are no physical Treasury securities you can put in a vault. Haven't been since 1979. So this is a digital ledger maintained by the Fed and the Federal Reserve and the U.S. Treasury. And Russia had about $300 billion of Treasury securities. So we froze them. Freezing them just means, okay, they're still Russia's securities, but they can't use them. They can't collect the interest. They can't pledge them. They can't repo them. They can't sell them, etc. They're kind of frozen, but they still belong to Russia. Now the U.S. wants to go a step further and seize them. Actually, convert the title, turn it over to some trust fund for the benefit of Ukraine, and actually, they say seize, I say steal. So they want to steal the Russian assets, the $300 billion. Now, we have a G7 summit coming up in about 2 weeks, June 13th to 15th. It's in Apulia in Italy. They've been working on this for over 6 months, but this is 2 weeks from now. So we're in a countdown mode, Daniela. Um, at the G7 meeting, they want to formalize what they're going to do. Now, there's several different proposals. One is just to seize the whole 300 billion. One is to issue a $50 billion bond issue backed by the Russian assets. So, of course, Ukraine would default on the bonds and the creditors would seize the assets. It's just a backdoor way of stealing the assets. Some people say, well, they'll just steal the interest. It's about 3 billion a year, so there's about 6 billion of interest piled up. So there are different things in play. We'll see what they actually do at the G7 meeting, but they're all the same in the sense that they involve stealing these Russian assets. Now, it doesn't mean that the next day the U.S. Treasury market collapses. There are, forecasts like that. Some people get a little hyperbolic. It doesn't mean that. I mean, the Treasury, one phone call to Jamie Dimon at J.P. Morgan and tell them to buy U.S. Treasury notes, and they will. The banks will do what they're told. So, but here's where the system could collapse. First of all, Putin would retaliate. There are well over $300 billion of Western assets in Russia. BP, Chevron, Shell, major U.S. oil companies, Starbucks, Coca-Cola, McDonald's, you name it. And they haven't, a lot of those businesses have kind of pretended to get out of Russia, but the assets are still there. Franchises are still there. Russia has not expropriated them, but they could. They could take all those, and they will. Putin said well, the thing about Putin is he doesn't bluff. He thinks very carefully about what he says. And when he says something, he'll do it, and he has. So if the U.S. steals the Russian treasuries, Putin will expropriate Western oil and energy and natural gas assets and just give it to Rosneft or Gazprom, which are the major Russian energy companies. It's estimated that it's estimated that there are more Western assets in Russia than there are Russian treasury bonds in the West. So Putin could actually make a profit on this whole thing. But here's the other play that it's clear to me because I'm a lawyer, but no one else has even discussed. Where are these assets? There's only about 5 billion of the 300 in U.S. banks, and those can be stolen very easily. But over 200 billion are in Euroclear. Euroclear is the largest clearing, settlement, and custody organization in Europe, and it has over $40 trillion of total assets. Stocks, bonds, other types of securities, etc. But it has these 200 billion of the 300 billion of Russian assets, U.S. Treasury securities, are in Euroclear. Now, if you seize those, Euroclear has offices around the world. They have offices in Bahrain, UAE, Hong Kong, Singapore, a rep office in Beijing, etc. Russia could sue Euroclear in any one of those offices. And just take Hong Kong, for example. Hong Kong is an interesting case. It's under the thumb of the Communist Chinese, but it kind of walks and talks like a Western legal system. And they have lawyers and courts and all that. So Russian lawyers show up in Hong Kong, sue Euroclear for 300 billion or more, with damages, etc., and get a judgment in favor of Russia. Russia can now run around the world and seize Euroclear assets that belong to anybody to recover that judgment. You could throw a monkey wrench into the entire global clearance and settlement system.
Wow.
by disrupting Euroclear, which is probably second only to DTCC in terms of settlement and clearance. So this is an example of the stupidity of U.S.
Uh,
officials. Janet Yellen doesn't understand any of this. Her deputy Wally Adeyemo doesn't understand it. But the real danger is not that the treasury market collapses the next day. That could happen over time. It's that Russia retaliates,
right.
gets a judgment, and freezes the entire Western clearance and settlement system. Now,
You would think that one official would have thought of this, Jim.
I can't think of I cannot think of an example going back years where the U.S. has been able to think two moves ahead. They're just not that bright. I mean, Blinken, Jake Sullivan, Janet Yellen's a statistics geek from Berkeley. She doesn't understand this. Her deputy, Wally Adeyemo, he's smarter. He understands sanctions law, but he doesn't know anything about business. He's never spent a day in business. He spent his whole career in the government, and then he was president of the Obama Foundation. That's not exactly, what I call market experience for a couple of years, then went back into the government. So they just don't understand it. I mean, maybe I've been in international finance too long, and I do have two law degrees, so I do think about it. But I would have thought that others would have figured this out, but apparently they have not.